What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It is July 18th of 2022. Today was an odd day. We gapped higher. We finished lower. Volatility was rising. Leading stocks were also rising. A lot of cross currents across the board. Let's dive into this market action. I'm actually back in New York for one more week helping my parents with their rodent slash house project renovation, forced renovation, etc. But let's dive into the video. S&P 500, it finished down 0.83%. Our NASDAQ QQQ finished down 0.85%. And again, this is after having large gaps higher. The S&P 500 at one point today was up almost a full percentage point, and then it finished down 0.83. IWM small caps finished down 0.28%. And our Dow Jones was down 0.64%. Cannot forget about Cathie Wood's ARK Innovation ETF, which finished down 0.32%. Pretty much all these indices closed towards the bottom end of their day's range. Volatility did rise throughout the session. And that was the one fly in the ointment, even from the morning gap higher. The VIX was just elevated right from the start of the day. Breadth overall was negative. We only had 43% advancers in the small caps, but look at this, up volume was 61.3%. And I think this is the primary reason why during today's action I was not losing my mind, because even as the market was drifting lower and maybe some of the mega caps like Apple and those kinds of names were drifting, my portfolio closed the day green on this day where the market was down pretty big. So it's tough. At the end of the day, primarily you want to be focused on the feedback that the market's giving you. And yeah, I think there were some cross currents. Trend model flipped from a +3 to a +1. Let's go even deeper under the hood and see what we find. Apple news. Apple plans to slow hiring and spending for some teams in 2023. It's a shame to see, according to Bloomberg. So some people are saying, oh man, this probably means they're going to have a bad earnings report. And this could also reflect poorly on the economy as well, because Apple's such a big company. So it definitely makes sense why there would be some hesitation after that news from Apple. Finviz Heat Map. Again, you can see Apple was down 2.06%. Now what's tough here is the healthcare group has been the best group for the last couple weeks. And that group did pull back today. But it's tough to really make a big claim. Is the sky falling, or is it just a pullback within a bullish trend? Like, I think there's a lot of investors and traders out there, and this is a direct result of social media, of constant stimulation, of looking at the markets 24/7, where even if something's in a bullish trend, like if it has a red day, people just become bearish, or they become worried, or they become scared. But if you look at any super performance stock, sector, group, country, whatever it is, even the most bullish groups, bullish moves, they always have some red candles in there. So you have a little bit early to say on that healthcare trend, if the trend is unwinding or if it is just a pullback. We can actually take a look at some of the names within that group. Sectors, again, you can see genomics was down, and the biotech sector was down. So the big leaders pulled back. But look at this, KWEB, the Chinese Internet ETF, which I'm currently exposed to, was up for today. Solar stocks were also positive today. And Enphase was one of my big winners for the session. Blockchain assets were also moving higher. We had a nice move in Bitcoin and Ethereum. So a very mixed bag. Style factors, you can see these international style factors did the best, followed by high beta. So high beta outperformed defensives, and it outperformed min vol. So yeah, tough to really say that's like super, super risk off. Common stock trades, none. Options trades, none. On a day like today, there's not a whole lot for me to do. And I'm going to be perfectly honest. I have this horrible machine over here in NY. My machine literally froze on me as the session was starting. So I had to restart my comp. By the time I got in, things had already been jostling around a little bit. And I was like, you know what? I'm not going to make any unnecessary movements here because I feel a little bit late to the party. But the good news is I actually brought my home machine over to New York, so I'm not messing around. But I actually have to run out and get some monitors for it. So right now I'm still on the laptop. Anyway, S&P 500. Take a look here at the pattern that's developing. Overall, what have we done over the last month? Nothing. We've gone sideways. the market does not owe you anything. The market doesn't have to go up every day. The market doesn't have to go down every day. Sideways is something that the market does. That's what it's doing right now. I know it makes a lot of investors and traders lose their minds when the market goes sideways. That is okay. Take a look here where we pushed all the way up almost to the 50-day simple moving average. We did see some overhead supply come in. And you can see that we did have a pullback. We pulled back to the 5-day EMA. And we actually undercut the 20-day simple moving average, but we closed above it. So again, so long as we're above that 20-day simple moving average, how bearish can you get? NASDAQ finished out the session, also found resistance at the 50-day simple moving average, finished out above the 5-day EMA as well as the 20-day simple moving average. And that's another one of sort of like the mental hangups. We as traders, we often have so long as you're above the key moving averages, that's fine. I think a lot of investors and traders, they think as soon as you start trending higher, like any down day, it's like, oh man, it's all over. Going back to the lows again, right? But it's really tough to say unless you start actually taking out downside levels, downside supports, that sort of thing. Maybe that happens tomorrow. Maybe tomorrow we cascade below this 20-day simple moving average on the Russell, NASDAQ, S&P 500, Dow Jones. And, it could certainly happen. But I think for today, you just kind of have to roll with the punches and really just react to what's going on in your portfolio. Dow Jones, very similar look here as well. IBM did report earnings after the bell. Let's take a look at what happened to IBM. The market maker implied move for IBM was 5.6% to the upside or the downside. That was what was priced into the options market. So far, it looks like we're down about 4 or 5% in the after hours market. That's inside of the market maker's implied move. So effectively, it's a complete nothing burger. But we do have some companies reporting earnings tomorrow. Let's take a look at which companies are reporting. We have, and let's go ahead and swap these out. We have Netflix after the bell, J&J before the bell, Silvergate, crypto company, interesting. Wonder if they're going bankrupt. No, I'm just kidding. Interactive Brokers is reporting after the bell also. So definitely some interesting names to look out for. I'm definitely curious to see if we get any power earnings gap setups. But these are kind of the boring names. Like Netflix, do I expect that to be a market leader? No, absolutely not. But yeah, very interesting to see those names report and this earnings season really heat up. So heading into tomorrow, I think there's a lot more questions than answers. And I think it's super important to just understand what's in your control and what is not. Do we know what's going to happen in the market tomorrow? No, not really. But all we know is that for today's pullback, we made it back to levels not seen since Friday. So yeah, tough to really ascribe some crazy meaning to this. So that said, we're going to have to see what happens tomorrow. Hope you guys all have an amazing rest of your evening. And as always, I'll see you all next time.